I am John Hargrave, and I'm joined by the esteemed members of the blockchain Web3 crypto angel investing group, Chain Reaction. And I wanted to start off, Eliza, as a co-founder of this group. Tell us the origin story.
Yes. Well, first I want to just give a shout out to a few other Chain Reaction members who are in the audience. I see Will, I see Aiden.
Peace.
Steve. Yes, Steve. Hang on. And Sean is somewhere in here. And Meg. Anyone else that I'm forgetting? Meg's over there. It's hard to see from up here.
Can you guys raise your hands just so
Yes.
people see the other members of the group?
Yep.
If you're interested in joining us or pitching to us, those
Yes.
are other members.
Accost those people after. So the origin of Chain Reaction. So about 5 years ago, I was working with a client from China who was looking for investments. I was working with him on investments in edtech, fintech, mostly, and he really wanted to get into blockchain. And I knew nothing about blockchain at the time. And I said, I'll find someone who can work with you on this. And he said, no, it's early for everybody. Go learn about it and find me some other people who want to work in this space. So I started going around to different communities at the local universities, attending pitch events. And we found, 5 people who were kind of interested in blockchain. We got together. Then we started launching a meetup where we invited all the different stakeholders, educators, investors, students, startups, random people from the subway who saw the sign and decided to come. And we created a wonderful community of about 100 plus people each month who came to talk and learn about blockchain. I accosted John on a stage at a conference once, so then we found out about BBA. And our group grew really organically until we had enough investors who were in the group that we could actually have a separate Chain Reaction investor group that could really complement this larger monthly meetup. So we ended up having the meetup as an educational forum, a chance to have local startups give pitches, and the ones that we're most interested in, we funneled them over to the angel investment side. And before the pandemic, we just looked at companies in Boston, and after the pandemic, we pivoted to being on Zoom, and it was wonderful in some ways because we expanded our membership to other states and cities, but we also expanded the startups that we considered, and we started talking to people, in different parts of the United States and other countries. So that was a real pivot. Since we have been around for about 5 years, we're kind of in a new stage now, where we have members are leading the group. We're doing a lot of work around bringing in new members, around bringing in startups, and members are really leaders in that. So we've kind of shifted from this very early model of a handful of people to a larger group of investors who are really taking the lead.
Yeah, it's great. Show of hands, is anyone here looking for funding, or maybe a startup or founder who might be? Yeah, that's great. So Ken, maybe you could talk a little bit about the process by which we evaluate investments.
Sure, John. The process is actually pretty straightforward. Go to our website, chainreactionboston.com, click on the Startup tab, and you can fill out an application. And we have monthly meetings, and what we do is we have 2 or 3 members of our group who will review all the applications. This past month, I think we had 17 applications. We pick 2 or 3 to present at our monthly meeting. It's a short presentation. It's 5 to 7 minutes, followed by Q&A. The members will caucus a little bit afterwards and see if there's interest in going forward. And if there's interest in going forward with that particular company, what we do is we set up a follow-up call. We go over, do a little light due diligence, and if we decide that we want to bring it either to it's not a fit for us, or bring it to our group for a full pitch, which can go 2.5 hours, and then we pride ourselves on trying to make a decision very quickly. And sometimes there are companies that are not quite there yet. We really, I think Chris is going to talk a little bit about what we like to see in a company, but sometimes we'll put you on our watch list. On our watch list, we keep track of it. We've had a number of companies. Recently, we actually went through the whole watch list, invited a few companies to come back because they've got traction and they've moved on. All our investments are direct investments made by the individuals in the group.
So there's a quick pitch. If you make it through that, you go to a more in-depth, and if you make it through that, you go through a full pitch, and then we make a decision from there, right?
Exactly right. And occasionally, we may be working with a lead investor maybe venture capital, and maybe they need to fill out a round. We may play a role in that. Because angel investing is really kind of an important thing because it's that bridge, between that friends and family type of money and the VC, and maybe give you a little more, maybe you need a little more money to get to that next level.
Yeah. Chris, maybe you could talk a little bit about what we look for in terms of qualitative or quantitative criteria for investing.
Sure. So, we're angel investing, so we're not a Series A, we're not looking at a Series B. We're looking at pre-seed and seed round companies that are just getting started. We do like to see, like Ken said, a little bit of traction, but we want to hear about, what your ideas are, what your vision is, and what your plan is to get to that vision. We're in the blockchain space, but we care about not just blockchain and cryptocurrencies, but even distributed ledger technology that you might be using. We're not focused on any particular industry. We like to hear pitches from all sorts of industries, whether it's healthcare or you're in RWA. We've heard obviously a lot of NFT pitches going back a few years ago, less so now. But we're looking to be there early, and we're looking to be there for the long term. I think a lot of maybe VCs who are in a Series A and Series B, they're thinking 3-5 years out. At an early stage investment like us, we're there to plan for the future. We want to be there to also help and mentor and also open doors for you. So don't be ever afraid to ask what other connections we can make. Like Ken had mentioned, sometimes you need help filling out a round, and maybe we can't fill it out all ourselves. We're happy to make introductions to other VCs and bring in other investors that might be useful, especially once we know your industry and space.
Let me open this to the group. How do we source deals? Where do we find our pipeline of great projects?
Well, it's a variety of sources. Some of them come from the members themselves. Chris recently attended a few conferences. We've got some applications from that. But, frankly, places like Cubic Labs. Cubic Labs is, sponsoring this today, but they also nurture a lot of potential platforms here. So we deal with all sorts of accelerators, Bitcoin Frontier Fund, Hypernest, Outlayer Ventures. You'd be surprised how many. I probably in the last month or two probably heard maybe 50, 60 short pitches. And, if something is of interest, I might call them up or reach out to them through Telegram or X or whatever it is and encourage them to apply a chain reaction. So they come from a lot of different places, and we do follow-on rounds, too. We've done a couple of follow-on rounds. Mm-hmm. So
yeah, I think, to lead on what Ken said, accelerators are really important because they help groups prepare and to pitch, not just angels, but VCs. For angel investments, you're looking for angel investments, for me, there's just no other replacement for attending events like this and meeting people one-on-one and getting to know a little bit about them. I find that very helpful so that I can help kind of evaluate who's on the other side of the deal. And then when I bring it to the group, I can speak a little bit, having some knowledge. I attended Consensus back in March. That was, I think, a big boon. I think we got, I don't even know, maybe 10 or more applications out of that. I also attend a lot of, you mentioned BBA, which is, by the way, Boston Blockchain Association. They have a lot of events, almost at least one a month. Great to attend. So if you're looking to either find an angel investor or join an angel investment group, I think it can be a lot harder than trying to find a VC. I mean, you can go online and Google search VCs pretty easily and find those in the crypto industry. It's a lot harder to find the angel investors. So to me, there's just no replacement to getting out there and meeting people at conferences like this.
Yep. I'll just add two other ways. A lot of us are members of other angel groups in Boston that don't traditionally do blockchain deals. They do a lot of life sciences or biotech. So a lot of those angel groups will get blockchain deals that come onto their platform, and they send them our way. And then we do a lot of work with universities, a lot of blockchain classes, including Ken teaches a blockchain class at Suffolk, where a lot of students and grad students come out of those classes with really great ideas. Northeastern is another one, Babson. So we get a lot of applications from those students who may be a little bit early on their journey for us, but we hope to give them good feedback and sometimes mentor them and invite them back at a later time.
Ken's blockchain class, by the way, is one of the best in the nation.
Woo!
Let me ask, hey, Chris, we were talking earlier about this whole idea of tokens versus equity.
Yeah.
And maybe you can say a few words about the difference between tokens and equity and how we think about it as investors here.
Yeah, I think that's a great question. I'm going to say right off the top is that every investor is going to look at those two things a little bit differently. I think, more traditionally, you're looking for equity, especially as an angel investor. You want to get in early on an early round and get that equity. Now, with investing in crypto companies and blockchain companies, there's the addition of what's called a token warrant, which is usually a percentage of the tokens that's put aside for early investors. When I evaluate an investment, I like to evaluate it as a whole, and I like to include both the equity and the token warrant. I'm not necessarily looking for just investments that include a token warrant. I know but there are other investors who are like, that's it. If there's no token warrant, I'm not interested because they see that as the way probably to make their money back quickly or make a profit very quickly. And most likely those, not to disparage them at all, but most likely they're probably going to be, as soon as they hit that period, usually some sort of lockup period, 6 months, 18 months, they might be dumping, so to speak, those tokens. I think it's great to have a token warrant. I think if I am going to invest in a company that is going to have a token, whether they're building their own L1 or launching it on another blockchain like a Solana or ERC20 token, that's nice, but it's also really hard to quantitatively understand what that might be valued at in the future. It's good if there's a company that is building a token. I kind of almost at this point expect some sort of token warrant because they'll have some sort of tokenomics that says early investors or the VC investors get about this much. I actually don't like to see it if it's a big piece. If it's a big piece of the tokenomics, that concerns me because I know I'm probably not going to be the only investor and that it's going to be a community of investors, especially with chain reaction. We almost always invest as a community. That could be problematic for the token going forward. I also don't know how it's going to be priced. And there's a lot of work that goes into getting on those exchanges to even make it so that I could actually buy or sell that token. For me, I like to focus in on the equity because I can understand what that value would be as the company grows. And I see the token warrant as a really nice to have, sometimes expected depending on what your business is. But it doesn't scare me or I don't shy away if there's no token warrant or if there's only a token warrant. I like to evaluate the investment as a whole.
I think with equity, it's a much more straightforward, easily understood model where you know how much of the company that you're legally owning by investing in it. And the token is such a new and weird thing, and everybody's token deals are totally different.
Yeah.
But you just had a great point that you want to look at the percentage of tokens that are being offered. Give us some guidelines on what you look for, like what's the low and what's the high amount that seem reasonable as an angel investor.
Yeah, I mean, that's a really good question. It really depends on the tokenomics and that. I'd like to see a percentage that's reasonable such that the investors don't control a majority share, right? That you hope that the tokenomics work, that if you're trying to build a community, that most of the tokens are going to be there for the community. If there's going to be some sort of mining program, or if it's a DPIN project where you're going to be rewarding node operators, that the majority of the token is allocated to that project because that serves the business, right? That serves the business versus enriching the investors and the founders. If the majority of the token goes to them, there's always a concern that there's not going to be enough for the community, that it won't gain traction on exchanges, and there's always the possibility of someone dumping on you, which I think, as we all know in this space, is a real possibility. So I'm not sure if I answered your question. It's hard to come up with a percentage, but you got to look at the overall whole and understand how the allocations are made. If I saw something that had a 68% allocation to the founders, I would probably say that's not for me.
I suspect there's some questions around this topic out here, so maybe we can take some audience questions now. But it seems to me that what you're saying is the token is solving the cold start problem of building up a network, because all blockchains are based on networks. You're trying to reward the tokens to early users to get that network going. So you don't want to see it all going to the founders and the investors. If it's 51% or higher going to founders and investors, you're saying that's too much. Most of it should go to the community for building out this sort of network effect to help the product be successful. right?
Yeah.
So you want to see it small.
Yeah, I think the network effect is really important when you consider tokenomics.
Yeah, that's great. Do we have a question?
So John,
Yeah.
could I just add something to speak to equity
Yeah.
versus tokens? So taxes are a way of life, right? And you're hoping that the investment you make is going to make you a lot of money, but it's how much you keep. One of the advantages of doing an equity deal, if it's a price round and you own the stock in one of these startup companies, is the 1202 program. So if you hold stock in a particular company that qualifies after 5 years, if there's a capital gain, there's no tax on it. So I don't think tokens would qualify for that. It hasn't been tested by law, but if you own stock in a company, so that's one advantage to doing an equity deal.
Yeah, you're going to pay
For an
capital
investor.
gains as soon as you sell that token, regardless. Yeah.
Yeah.
And then, Eliza, you were saying that a lot of more traditional investors don't want anything to do with tokens at this point, right?
Yeah, so some of the other angel groups that I've been involved with, one of the reluctance, reasons for their reluctance about investing in blockchain is not understanding the tokens, not really trusting them, not trusting blockchain anyway. It's a really different way of investing when you're looking at tokens or when they had the ICO craze. So having equity deals seems like a more comfortable entry point for investors who may not have done a blockchain deal before. So it might be a new area for them, but if some of the structures are the same, that's like a more comfortable way to enter the space.
Chris and I are looking at a deal right now where the valuation of the equity is really high. We felt too high, but there's also a token warrant that goes along with it that we think a lot of their early investors are looking at that token as possible way of getting some of the liquidity out. Of course, your token's got to be able to be sold as well, right? So you got to have liquidity on the token.
Right.
All right, do we have any questions around this topic? Yeah, right there in the second row.
How are you seeing current valuations for companies now versus 6 months ago in your environment?
The question is around current valuations of Web3 blockchain companies now versus 6 months ago.
I'd say that valuations are down, but not substantially. I think anyone that has been trying to raise funding last year ran into a brick wall for the most part. There's a lot of money out there. There weren't as many deals that were getting done. And quite honestly, I think what was happening is that people were shoring up previous investments that they had made in portfolio companies. But having said that, if you've gotten through last year and you have a decent runway ahead of you, there's plenty of money on the sidelines. I think we're now getting to a point where I think more money is going to be invested. Valuations are tough. If you have a running business with a lot of cash flow, you can use discounted analysis and comps and things like that. But with pre-seed and seed companies, you really can't do that. So it's really just kind of a rough estimate. But to answer your question, I think the valuations are down a little bit. But when you have someone come to you with a PowerPoint and they say it's worth $30 million, it probably isn't. And that's why that's a good reason to go to angel groups or talk to VCs or whatever, and you can get the feedback and adjust your valuation. You'll know when you go out to investors. That's not the only thing, but that is a kind of a key thing. Because if you're valuing something at 20 million versus 10 million, for the investor, it takes a lot more to get that big return. Kind of makes sense, right?
And I think, Eliza, we see that these come in waves or cycles depending on what's the crypto flavor of the moment, right?
Sure, yeah. We had a whole craze a few years back of DeFi applications. Then we had, like 30 NFT applications. Now it's DePIN. So there's definitely ebbs and flows. And when something's really hot, we see like the $30 million deal pre-revenue. And so we tend to kind of wait a little bit for those to die down so we can really evaluate which companies here are kind of going to be here for the long term. They're not just part of the craze. And we always want to be founder friendly and have a fair deal. The founder economics have to really work. We want the founding team to be incentivized to stay with their company, right? So as a group, there have been times early on where we've encouraged a founder to raise their valuation, right, to make the founder economics work for future rounds. So we take it case by case. We look at the company. We look at if they have any revenue. We do comps where we're able, and we really want it to be a fair deal that's going to benefit investors and the founders.
Other questions at this point? In the back, yeah.
Over here?
Right
This
here?
one over
With a
here.
microphone.
Oh, I'm sorry.
Sorry.
We've got a microphone.
Yeah.
Hi, my name's Calvin. Thank you guys
Hey,
for
Calvin.
the insight into
you
angel
from,
investing in
Calvin?
Web3. I'm from Canton,
Canton.
in the South Shore, actually.
Okay, I'm doing crowd work right now. All right.
Well, to your
What's
point,
your occupation? No.
to your point about some shifting metas in the space, we've learned that for a company to remain adaptable is one of the most important aspects as Web3 develops. I was wondering, what are some of the common traits to the people and businesses you guys have seeded in the past couple of years?
Yeah, good question. Are there any defining factors or characteristics?
You like to have a pretty much proven out MVP. You like to have someone show some traction, right? You like to have someone, oh, gee, I have actual customers, I have some revenue. I'm not saying they're producing positive cash flow, or maybe they have subscribers or they have customers or partnerships. You like to see, for me, it's really nice when I see a team that's done it once before. They've had a successful exit, and even if they haven't, because that means they've been through the whole process before. Those are some of the traits. And also, you like to be excited about the project. If say it's a NFT project, and there are 20 companies, large companies already doing the same thing, well, you have to make sure that whatever you're doing, maybe you're doing back office support or something that's not covered in the marketplace. So you want to see something like that, I think. I think the management teams on these smaller companies, early stage companies, are not fully developed. So I think, one of the advantages of an angel investor is that you may have someone that is investing in you that has some expertise in your area. So if you're very coachable, I think that's a positive too.
Yeah.
Thank you.
I'd also add, the shifting meta is kind of interesting. There's a couple of companies in our portfolio that have pivoted, actually. We had, I believe, one company that was an ETH mining company, which you can't really do anymore. So they had to pivot, and they've now actually become a data center company, right? So we look for that. I think there's also been cases where a company pitched us, and we said, no, this isn't for us. And then they, a year later, pivot, and they actually come back and pitch us again, and we're like, oh, we love this new way you're going, and we're already familiar with the team, so that's helpful too. So, you have to be adaptable, I think, both as an investor and as a startup, right?
Yeah, that idea of being coachable, I think we place a very high premium on that, because we do try to approach it as a dialogue and as a collaboration, that if we do pass, that we give you some meaningful feedback to help you get better. So it's not just going to be your application goes into the void, but you actually hear back from us, hopefully with some good stuff that you can take back. So being able to receive that, you don't have to agree with it, but at least being able to receive it and hopefully make some pivots where it makes sense with your vision is a real plus.
One more thing to add, a really well thought out go-to-market plan.
Yeah.
Because the key thing is acquiring customers, right? And that's the thing that fails most often. And to be able to acquire the customers at a reasonable acquisition cost. So, if you're going to make a pitch, think through that go-to-market plan. That's where I see probably in the pitches the most weaknesses and the ones that just don't work.
I just need to ask, am I following this clock down here? Okay, great.
I think
Other questions? Yes.
How you doing?
Gentlemen, we're
Thanks for
waiting
the
back
presentation. My name is Bobby. Just wanted to double click on something that was said. It seems like some of the value that you provide to these companies is the quick money that you can provide them in Flux. Can you maybe expand on the other value that you provide, whether it's expertise in the market, or how do you kind of assist these founders in growing their companies?
Good question. Additional value that chain reaction
Maybe
brings
we
besides
do
a
that yet?
check.
Yeah, I mean, I think Ken kind of mentioned it. We have a broad membership base, so we have a lot of different experiences. We actually come from a lot of different backgrounds. I don't think we all would have met each other probably had we not want to invest in blockchain. We have people in the education space, the healthcare space. I come from an IT and technical background, so I tend to help with technical due diligence with them. So we just bring a broad network of people together. And that's one of the things that we offer. Plus, with I think over 30 companies now in our portfolio, we have some experience. We've gone through this before with new companies and sometimes first-time founders. so we can provide that mentorship as well. Yeah, so
The
it's,
question is, are we pooling money for all these investments?
yeah, you want to answer that?
Yeah, so we do our diligence together as a group, but each person invests as an individual. So we don't have an SPV set up unless we're doing a special deal with a VC co-investing. So the way the process will work is if you decide to join the diligence team and learn more about the company, we make a deal as a group. So sometimes a company will say we need a minimum of $100,000 from your group. Other times they'll say it has to be a minimum of $50,000 or $250,000, whatever that company has set and the minimum check size. Our members come together to form that amount. Sometimes it's above the amount. So if we set the size at say $10,000 and you decide you want to invest $10,000, everyone reviews the forms and we'll call out to each other if we see something that maybe we want to check on and double click on. But otherwise, we all are responsible for reviewing our own forms, signing them, wiring our own money, and following up, right? If you get an email about something, it goes to you directly. But no one just invests on their own because usually we have that threshold with the company. Our own threshold is 2 or more members doing a deal, counts as a deal. Usually we've got more than that. But again, the diligence is done all together, and that's a beautiful thing about being an angel group, especially in a space like blockchain, which might be new for some people. Like I said, for me, 5 years ago, it was brand new. Is that you come together with people with all different backgrounds, and whatever you're bringing, you're going to know something that's going to add value to the group because a deal is going to come along and you're going to know something about that space. It's a great way to learn as a group and as a community.
I'll just echo that. If you're thinking of joining us as an investor, so I come from a marketing background, I run a marketing company. I totally get the marketing, go-to-market, branding, messaging, communication. I got all that. But when it comes to the actual quantitative stuff, these guys are way better than me. So I really look to them and turn to them for help me understand if this is a good deal. And I think that's how we complement each other here. It's kind of fun. Yeah.
I think the other thing, John, is I've started 2 businesses before, and I've made every mistake known to mankind. So I can probably tell you the things to avoid more than anything else. But it's nothing like experience, I think. And the aggregate of experience of 15 or 20 people can be beneficial to a new stage company.
Yeah, plus we've all just been in the crypto Web3 space for so long, too. That's the other piece. Other
We
question?
had that friend over there.
Yeah.
Hello, yes. I was just wondering if there was any
Wait,
pitches.
what's your name?
Nicholas.
Nicholas.
I was wondering.
Welcome.
Welcome, thank you.
Thanks for coming.
Yeah, I was wondering if there was any pitches in the DeSci space, decentralized science, which is building up a brand new, or actually a parallel scientific research stack.
Nicholas
We've had
wants
2.
to know about decentralized science.
We've had 2 applications over the years. One was before the pandemic and one was post. I'd have to look them up. One was a group out of South Africa that was looking around more about collaborating different people's research kind of in one spot. And the other was almost making like a stock market around peer-reviewed articles. It was something like that, which was really interesting. It wasn't the right fit for us at the time, but I'm happy to dig those up. And I think that's a really interesting space. Do you have experience in that? And do you think it's kind of an up-and-coming thing we should be looking at?
I don't have direct experience, but I've definitely done a bunch of research and all in terms of knowing which companies are emerging and what their applications are. Like you said, there are many in the peer review side of it, the data side of it, the IP on chain. There's, so it's like a whole stack where it can be innovative and parallel to the current system, basically working out the outskirts of where the current research stack fails.
So Nicholas, you're going to join. You'll be our DeSci expert.
Thank you, appreciate it.
Be the DeSci guru. I know there's other Chain Reaction members out here. Is there anything you guys want to add or any questions that you guys would like us to answer?
We had a couple more people walk in since we got Tom Duffy arrived and Sean Sweeney arrived. Anyone else just arrived?
It's basically half Chain Reaction.
Yes, we wanted the room to feel full.
Yeah.
Anything anyone wants to add? If not, we can do more questions.
Do you want to talk about one of the stories or something?
Yeah, tell us a story about someone.
I set that up for Chris, not for me. There were 2 brothers that came to us, and they came up with this idea to use blockchain in healthcare. And these were 2 guys from Tennessee and young. They actually pitched us. We put them on the watch list, right? So I kept in touch with them and helped them.
So let me just unpack that. They go through the whole process.
Yes.
They do the whole thing, and then we say thank you. we don't think it's right for us now. Here's some feedback from the members. We want to hear how you're doing. Follow up with us in a few months, right?
Yeah, and the feedback includes if you do these milestones, and we'll stay in touch with you. But I like the two of these young guys, and I made it a personal thing, to stay in touch with them. So they came back and they had raised a little money and they got some grant money and they kept it going and they're making progress. And they repitched us and we decided to make an investment. The thing that I really like about it is I think we put in a couple $100,000, but they had $1.4 million from a venture capitalist. And we got the same deal as the VC. We got the tag-along rights, all that sort of thing. The venture capitalists knew a lot about healthcare, but not much about blockchain. So they wanted us involved. And one of the nice things is that I became an observer on the board, so I know exactly what's going on in the company. They continued to make progress. They were getting contracts, but they weren't really executing on the contracts, so we had to work through all that. But I worked with them on things like governance. And then we actually did a follow-on round and we put another couple $100,000 in the company when they needed it. And they also went through an asset sale. They sold some assets. So there's a lot of things these young guys were doing. There was a learning experience for them. So, we don't know exactly how it's going to come out. The next board meeting is next week, but they've made a lot of progress. They've got revenue. They're adding clients, but they were so coachable. And I think they really loved Eliza.
They call me ma'am.
Ma'am all the time. So, it was a great experience to work with two young people that were making progress, had a great idea. We think it will be a good investment. But that shows that I think it goes to, you were saying, what's the value add?
Yeah.
Well, I talk to them once a month. And I'm not saying I know everything, but if there's something I don't know about, I have a connection to that can help them out. So that's the real good story. I hope a year from now you ask me the same question. I'm going to say, I don't know, 10x. What can I say? And it was 1202, no taxes. It was wonderful.
Yeah.
John, I wanted to talk a little bit about what makes a good pitch, because I feel like
What makes a good pitch,
we do
Chris
see
Marzilli?
good pitches. We see a lot of pitches. We're taking some today after. I think we're going to talk about it. But I worked at Salesforce for a number of years for Mark Benioff, and he has a great quote that I like to say is that the business of business is improving the state of the world. So to me, a good pitch, you should come in and tell me what the current state of the world is and why you want to improve that state. Right? What are you going to do? What's your vision to make the world better, to improve this little piece of the world, this little slice of the world that you want to focus on? How are you going to improve that? I want that vision, and then I want a plan, a tactical plan about how you now achieve that vision. I think Ken had mentioned a go-to-market strategy is a big part of that. There's also financials that are part of that. There's team building. There's community building. I want to make sure that you cover all of those check boxes when I get a pitch, and that's tough to put together in a 10 or 15-minute pitch. So you really gotta know it. I think that's one of the reasons why we've been so successful with accelerators, because they often help with that pitch. But also get feedback, practice the pitch over and over, get feedback, incorporate that feedback, make sure that you're not trying to cram in too much tech speak or too much financial speak in a 20-minute presentation, because that can really lead you down some paths. And I'll also say that when investors ask you questions, do your best to answer the question, because we get a lot of pitches where we'll ask a very simple question, and then the founder will go on for 5 minutes, and then we'll look at each other, and then we'll ask the same question again, right? So I find this is a trick that I tend to use when someone asks me a question in that situation. I pause for a second. Nobody notices that you pause for a second, by the way. It might feel uncomfortable, but nobody notices it. Repeat the question in your head, and then try your best to answer it. If you want to give a long answer and a short answer, start with the short answer first, and then ask the investor, do you want more information on that? And then give them the long answer if he or she replies. But I think that's really important. I mean, you got a very short window to make an impression, and you got to do it as precisely as possible. But communicating that vision, communicating the current state, the vision, and the plan are the key parts of any pitch.
The other thing I would add to that is you've got a group of angels, and We all think we're very smart, and so they want to ask questions. Everyone has questions. You never get all your questions answered. So if you give a long answer, maybe you answer one or two questions. You want to answer as many questions as you can. And then I would also take any opportunity to practice pitching, I would do it. Even if you get rejected, don't take it personally.
Yeah.
It's practice, 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 and you find that the more times you're in front of a group, it'll be a better pitch every time you do it.
I think treat the pitch like a product, and you're just constantly iterating on that pitch or on that product. If you guys aren't already subscribed to the newsletter from A16Z Crypto, that's Andreessen Horowitz's crypto arm, A16Z Crypto newsletter, it's really great. On the drive here, I was listening to one of their talks about how to tell your brand story in Web3, and it was all about pitching. And it was great, and it was about many of the things that these guys are talking about here. So check that out. Let's see. We're going to actually have a chain reaction meeting this evening. Tell us about it. Who can come?
It's at 4:30, I believe. Yeah, 4:30. So we're going to have our chain reaction monthly meeting here. We usually do it at a law firm partner downtown Boston, but we're doing it here, and we're thankful to Cubic and Manuel for hosting us. We'll be across the street. At, I think it's 14, what number is it?
1495.
1495?
Fourth floor.
Fourth floor across the street. You may join us if you'd like to know about chain reaction. You need to be an accredited investor. Feel free to Google that if you're not sure if you're an accredited investor or not. And if you are an accredited investor, we'd love to have you. No pressure to join. Just come check us out. We have 2 pitches tonight of great blockchain companies, one local in-person company and one company calling in the middle of the night from Romania. We also have a portfolio company, Beamable, who will be here in person and giving an update on their current raise. Sean, you want to add something?